Awesome, everyone. Thank you for, listening or watching this video. This next episode is someone amazing. He's got a great product out, real estate investor as well. He's the owner and founder of STR Insights. Kenny Gladwell's in the house. Thanks for having you come. Thanks for coming to our podcast and to spending the time to give us some insights and your recommendations and your expertise in this whole field. So I appreciate it, man.
Yeah, thanks for having me on, Terry. I'm really excited to share some insights and data, and that's my thing is talking and sharing data and helping fellow investors, find properties that are going to make them the money and reach the revenue goals that they're really looking for.
Cool. Awesome, man. So let's just start off with let everyone know what Kenny is. Like, where is he from, where he grew up, and we can lead on to what made you start STR Insights, which is a great platform.
Yeah. So, man, where am I from? Where I grew up? That's an interesting one. We're going back, man.
Going
All
back,
right.
bro.
So,
Going back.
most people are like, yeah. So, what led you to STR Insights? And but no, this is great. So, I appreciate it. So, I guess I grew up in Georgia. I'll keep it simple on that. I grew up in Savannah, Georgia. If anybody knows where that is. I don't have the Southern accent anymore. So I can't. I mean, I used to say I'm from Savannah, y'all, but not as much anymore. Because after high school, I did like a church mission trip for 2 years to Madagascar, and so I spent a lot of time there. I speak French in Malagasy, and then I went to college in Utah. So I went to Brigham Young University, and that's where I got my degree in economics, and got really an interest in data. Um, and from there, I was recruited by Citibank to come to New York, where I currently reside, to help them in the equities research market. So basically, I was just working on big data sets. So analyzing Fortune 500 companies, we would look at and try to predict their revenue. And so anyway, so it was really I'm very involved in data, and Airbnb or Vrbo or short-term rentals became my side hustle back in 2018. And I actually started with rental arbitrage. And I don't know how many people on this or know too much about rental arbitrage, but it's essentially subletting. I did rental arbitrage. I picked up some houses with apartments in them, and then some of the owners next door, the neighbors, figured out what I was doing, and they were like, "Hey, that's really cool," which I was surprised on, and they're like, "Can you do this for me?" And so I co-host and I rental arbitrage, whatever I kind of offer a package. They can kind of pick based on that, but and then I got enough to start buying properties, and so I bought two properties. And my recent purchase it's in the middle of the Finger Lakes in New York. Sits in Watkins Glen. So anyway, that's kind of my investor story. But Terry, I really ran into this issue um, last year. So the beginning of 2021, I've got all this money. I've got six properties where I live. I'm like, man, I really need to diversify. So where can I find my next big rental? And so I started looking, asking people, oh, we hear Smoky Mountains, we hear, the Gulf Coast, Destin, Gulf Shores, and then maybe Galveston, all these different markets across the US that all these investors are in. And I'm a numbers guy. So I started crunching the numbers, and I ran into a couple problems. One, I can't afford Smoky Mountains, to be honest. So and just cross that one off the list. And then and that probably included Gulf Shores and Destin as well. And then two, the prices there, yes, they were, I couldn't afford them, but they just didn't make sense for the revenue numbers. For me, appreciation is great, but I don't count on appreciation in my deals because that's kind of future forecasting for the long term, and we don't know where the market's going to go. And so for me, cash flow is king. So I'm all about, the cash on cash return. How soon do I get my money back that I put into this property? And my goal is a minimum of 3 years. Or sorry, yeah, I guess maximum of 3 years that I Anything more than 3 years, and I don't get my money back, I don't look at it. So it has to be 30% or more in simple terms. So um, anyway, so I got, I go through the normal data providers out there that provide the revenue metrics and the occupancy and ADR for all these different markets. But I spent thousands of dollars. I even paid for, the entire country, or I paid for, special data sets they could give me. And the problem was nobody could tell me vacation rental home prices. They could only tell me revenue metrics. So they couldn't tell me where to go. They'd say, "Hey, Kenny, yeah, just tell us what market. We'll give you the data on it." I'm like, "I don't know what market. Just like tell me." And they're like, "Well, you can look at this. This one's performing well, but then you look at the prices and it just doesn't make sense." So I decided to use my own knowledge and resources. I enlisted one of my friends who is a developer, and we set on this journey last year and actually started tracking and looking at different, tracking all the properties across the United States and seeing not only how much revenue they made, but also their what it costs to enter into that market. And so, and that's how STR Insight started. Is it in a vacation rental data platform that looks at revenue and what we call valuations of short-term rentals in a particular market.
Awesome. That's a lot of information there. It's a lot, a lot of information, but that's good. That's always
Long
good.
story short, no.
Long story
Or
short.
just long story, right?
Can you go more in depth as far as how like STR Insights can help someone like locate a property, like for
Yeah,
example, I don't know, here in Florida, or like,
sure.
just kind of break it down so they can kind of get an idea.
Sure, absolutely. So, the first thing that people need to do and understand is they need to find the right market before they find the property. A lot of people, and I mean, it's just because of, what they've seen and maybe what they've done in the past, if it's their second or third property, but even newbies as well. What I see first time investors is they go straight to Zillow or Realtor or wherever the MLS system is, and they start looking for properties in markets that they know about, which is fine. I mean, that's one way to approach it. But the problem becomes now is you're searching based on what you think might be good, and it becomes a gut feeling rather than a data driven feeling. And what I mean by data driven is just the numbers to support whether it's a good investment. And so this is a business, in terms of investing in short-term rentals. This isn't let's do this for fun. I mean, if it is for fun, then, by all means, but if you're trying to make this an investment and maximize your revenue, you really got to target areas that are going to perform well, not just with revenue, but the prices of the homes. So short-term rental insights, STR Insights allows you to compare all the markets across the country and look at their average revenue with the average price to enter into that market. You put those numbers together and you get a gross ROI. So now you can compare all the markets across the country, but specifically based on your preferences. So we really made the tool take into account like your budget, maybe your destination type. So you mentioned Florida. We can get even more specific. So because there's a lot of markets like Orlando and Tallahassee, they're not on the beach. So what if you only wanted to invest in beach markets in Florida? STR Insights can take that information and put it together to show you a list of the top beach markets in Florida based on this budget, or maybe particular markets you already know, and you can compare those. And then what you can do from there, because you asked a specific question, Terry, you said how to find the property, which is the key, but you got to find the market first. And so once you find the right markets, you can dive in deeper and look at the optimal bedroom count. So we break it down by all the bedrooms, and you can see, okay, this bedroom count in the different revenue percentiles makes, X amount of dollars, and the purchase price to essentially get into that market for that bedroom count is X dollars. And then once again, that gives you an ROI, and it tells you what you should be targeting in that market. And then you can go into that market as well. And we have a map view. It's called a market profile, where we break down some high level metrics, but there's a map of all the active listing vacation rental properties that you'll see on Airbnb or Vrbo. And you can hover over them and see their individual revenue. and click into their listings and see, their listings on Airbnb and see where they're performing. And the reason why I love the map is because we also give you the ability to filter by revenue percentile. So if you wanted to see where the top properties are in a market, because that's important, and target that area in your search, you can. So because if you think about it, like think of a beach market, for example, the top performing properties should be on the beach, right? But other markets where it might be in the mountains or on a lake or other areas, certain top properties might be located in a particular area versus all the other properties. So I'll give one example and wrap this, this point up. But I love to throw out. So you went to you saw we spoke actually at the Nashville conference, right? You remember Ella J,
Yeah,
Georgia. I don't know if
yeah,
you remember that example,
I
but
remember.
yeah. So Ella J is a mountain market in North Georgia. And so when you think of the top properties there, you think of they should be on the mountaintops with these gorgeous views. However, the top properties are actually on rivers or streams. And the reason why is there's a lot of good fishing there, but you don't know that if you don't know that market, unless you look at the data. And when you look at the housing prices, prices of homes that are on the top of the mountains are priced higher than prices of homes that are on the river. So there's an opportunity there. And you don't have to be a data scientist to see that just in the data and STR insights. So that's, so finding the market, we went from finding the right market, finding the optimal bedroom count to actually targeting the right spots in the market where you can maximize your revenue. That's really the three steps and the three keys to finding the right property.
Awesome. And once you figure that out, then it's about purchasing that property, right? Taking
Yeah.
advantage of that, and then going down the whole short-term rental aspect of it, right? And
Yeah.
I'm pretty sure you use that your data to get some of your properties to work that way. Can you give an
Right.
example of how that worked out for you? And
Yeah. Yeah, absolutely. So I'll show talk about my last property. So before I even put out this tool to sell it, I needed to make sure it was legit. So I searched, in the areas that I was interested in. And something important to remember is my top markets list is going to be different than your top markets list because I have personal preferences. Like I'm okay with investing in the state of New York. I know a lot of people aren't because of taxes and regulation and so on, and that's fair. But that I would like, hey, I can drive to my property. Why not? Let's see if anything pops up on there. And then I also I love the state of North Carolina. I love Asheville area and Western New York. So I wanted to see, hey, is there anything in North Carolina that could be available? And so actually the top two markets were in North Carolina, and a third market was in Watkins Glen, New York. So I checked on Zillow in these first two markets. I did the three keys. I said, okay, here's the market, here's the optimal bedroom count, here's where the top properties are. Is there anything for sale in that market? That's a good deal. Yes or no? No. Okay, next. And I got to the third one. I go to Watkins Glen. Boom, this 7 bedroom, 7 bath property listed for a whopping 370 on Seneca Lake. And guys, they're in Watkins Glen. Watkins Glen, there's a NASCAR stadium there. So there's races throughout the entire summer, every weekend. Formula 5 race, big time races. There's obviously a big lake there. There's a state park, huge state park that has over 1 million visitors a year go through there. And they go through there in the summertime because it snows in the winter. So, and then there's a ton of wineries. There's 50 wineries within I'd probably say 15, 20 minutes from my property there now, but from Watkins Glen. So there's a lot of traffic that goes through there. And I didn't know that. I'd never been to Watkins Glen before. And so I looked and I found this, 7 bedroom, 7 bath. And I'm like, what's going on with this? And I had been on the market for 150 days. And I'm like, okay, what's wrong with this property? And so I called. There's nothing wrong with it. It used to be a bed and breakfast. But the kicker was the city of Watkins Glen had a memorandum on short-term rental permits. So they would only allow up to 60, and they're already giving them out. So they're not taking any new ones. And so the realtor said, look, like I don't, we haven't been able to sell it because of that. Everybody wants to use it as a vacation rental, but they can't. To call the city to see, when because I heard that they're going to raise that. So I did. I called the city up, which I recommend everybody if you hear that there's a permit or regulation, just call the cities up because of this. So I called the city and they said, actually, today we just opened up new applications we're only doing it for 1 month. We're closing off. We're only taking 20 applications. I was like 12. And so I immediately hung up, called the realtor back, said, I'm checking it out tomorrow. Drove out there. It's like a 3 hour drive, drove out there, checked out the property, and it was great. So then I started running all the numbers and everything. And I kid you not. So I use multiple data sources, even my own, just so everybody understands that because I'm such a data nerd, but you should do that. So I use all these different data sources to figure out the revenue. And they told me the gross revenue on this house that was listed at 370 would do 120K a year. So 120,000. And so I'm like, okay, I got to put this thing under contract. Is there any, so I did with a contingency that I get the permit. Long story short, I got the permit. So now I'm on this island essentially of, no, there can be no more competition. What the listings there are there, and there's only 80. There's not that many big hotels around. It is so anyway, the cash on cash, to give you guys a deal, the cash on cash, I'm estimating for this year, even with all the adjustments of the economy and everything, is going to be 75 to 80%. So I'll get my money back in probably about 1 more year after the summer. So anyway, yeah.
Damn, that's awesome, man. See that?
Yeah,
And that's what I like about your tool, like your software. It gives you all that data, and we use all the time, and you can literally see which cities from where we are in Florida, which ones to target, which was like amazing,
right.
especially with this
Yeah,
market, how everything's going. So it's definitely a game changing. Definitely.
yeah. It Just to kind of follow up on that, I mean, I like to say like it's a tool created for investors by an investor. I am an investor. People I work with, I test it on other investors to make sure that it's right, it's working, it's got the right information so that people can actually take, you know, actionable intelligence from it and do something with it. Because that's what's important is you walk away and you're able to take some sort of action. So yeah, it's that's what it was, and that's the intent.
Yeah, I totally agree with you. And even before talking on the podcast, you mentioned you guys are launching a few more features.
Yeah. Yeah.
And can you explain to those what those are and what to expect?
Sure, sure. So, as we talked about, one of the number one things, because we're telling people, hey, here are the top markets to invest in. But as everybody knows, especially like with Watkins Glen, there's strict regulation coming out in a lot of these markets. And so everybody asked me when I first launched the tool, can you sort by regulation? Because some of these markets, you can't STR there. So we spent some time on that and we found a way to do that. And the way to do that is to partner with people who know the regulation in those markets. So we've actually partnered with realtors, so that realtors actually, so we have an exclusive realtor list. They pop up on the page, in a particular market if you're looking, and it says, gives you all the data and the information about that market. And it says, hey, here's a realtor who owns STRs. They have to own STRs in order to partner with us and knows the regulation. And then we have 4 different categories for regulation. It's little to none, moderate, heavy, or restricted. There's definitions next to each one. It's not just like this random category, but and then you can reach out, and sometimes the realtors, they put more information there too about like in depth, because you know how it is. There's like some streets that won't allow it, or HOAs. You can't put all that in one tool, and we're not going to monitor that. There's no way to do that. So we keep it broad, but you can sort by that in our tool now too, those categories. You can say, only show me markets that essentially allow STRs, or maybe I have to get a permit, or I don't want to worry about any permits at all and I just want freedom, little to none. So show me those markets, and you can do that in the tool. And yeah, so it's a growing feature. I say growing because we're still trying to get more and more and more information. So over the next couple of months, but right now, I mean, we've got almost over 50% of the markets in the US. There's 13,000 markets in the US. So we've got a lot of the regulation. We're going to be the first tool, I think, that's going to have almost all the regulation in the US. I've seen a few other people attempt it, but the problem is the data gets stale. So we're able to use experts in each area, and they update it on their own basis because they're essentially promoting themselves in our tool to give us this information, and then we pass it along to the user as a feature. So it's kind of a win-win for everybody. It's just creating a platform where you can go to almost as a one-stop shop just to know, can I invest in this market I've never been to?
Dang, wow. That's that's game changing, definitely.
Yep.
Ooh, I get excited just talking to Kenny, man. He gives out like all the juices, like he gets everyone hyped up, man. It's a great product, man. I freaking love it. There was one thing a lot of viewers or people listening probably don't understand what the cash on cash means. Can you
Yeah,
elaborate, I guess, more in detail what that means so they can understand how to
sure.
utilize that with your platform and just, in this industry as a whole?
Yeah, sure. That makes sense. So in our tool, just to be specific, we show what we call a gross ROI. So a gross ROI is the yearly gross revenue a property or a market or a bedroom count in a market can make, divided by essentially the purchase price. So how much it costs to purchase that property. So, we'll say 20% is a really high gross ROI because in cash on cash sense, if I put, let's take $1 million property. If I buy $1 million property and I say I do a second home loan, I put 10% down. So I put $100,000 down. How soon will I get my $100,000 back? And then break that into a percentage. So if I get it back in, my goal is 3 years, that's around a 30% cash on cash return. Now, bringing it back to the tool, our tool doesn't do cash on cash. That's me as an investor calculating in my pro forma, or just doing my math and stuff on my end. In the tool, it gives you a gross ROI. So what you might see, because we're not showing individual properties, we're showing markets or bedroom counts. So you'll see, okay, you've got a 3-bedroom in this market. You can get we'll say a 15% or a 20% gross ROI. In terms of cash on cash, that ends up being about 10 to 12% higher in cashing. So if it says a 20% gross ROI, that's a 30 to a 32% cash on cash return on average, depending on if it's a turnkey property and there's not a lot of rehab that has to get involved. So, which should be taken into account too when you're doing your pro forma.
Oh, wow. That's That's pretty cool, man. A lot of people, like, I'm gonna be honest, even when I went to the conference, I didn't know what cash on cash meant until I went. So that was definitely game changing. That helped out a lot. Um, what's next for STR Insights? Like, what's the next big thing for you guys? Because you guys are always
What
coming up with
isn't
something.
next, man? Yeah, what is it next? So, what's next? We are working on making our tool a little more flexible in terms of like finding. We're the first platform out there that that gives you access to everything. The problem with that is that it actually gives investors a little bit, it's a lot of data. It's like, wow, I can look anywhere I want. And what ends up happening is you look everywhere. You're like, wow, I didn't know about this market or this market or this market. And then you don't end up investing anything because you kind of get distracted and you don't have that focus. Which is a real problem. And so what we want to do is kind of help that flexibility and just make things a little more clear and straightforward. And so we're just making our product a little more user friendly, I should say. I feel like it's straightforward, but we could do better and make things a little more clear, maybe show some maps and some charts of the data. Also start showing actual historical data. So we show the last 12 months of history. And as we've been building up, we now are starting to get over a year of history. And so we can start showing, seasonal trends and different things as well. And so there's a lot of opportunity. But I mean, honestly, so we're going to work on that. But the next big project is an actual revenue calculator so that you can put in an address, put in property features, and get an actual revenue range based on the inputs you put in. So,
Cool.
which
Wow.
I have a lot of opinions about. I am not a fan of current free calculators for different reasons, but they're not accurate. So just especially with things changing in the market and how things are, anyway, there's been a lot of a crying demand for a change in that. how that's calculated, and so I want to be there to answer it.
Yeah, I think
So
you guys will. And how would you guys approach that aspect since that's challenging with the calculator side of it? Like, what do you think would
So
be that?
here's why I don't like the calculator, I guess. I should answer that first. So the problem with the calculators is they take a radius. So if you tell me an address, they'll take a radius of properties that fit that bedroom and bath count within the radius and maybe even guest count as well. And then they'll average the numbers together. And thankfully, a lot of them will tell you here are the properties we're saying that compare to the one that you're putting in. The problem with that is we'll pick a mountain market because it's easier to illustrate. But I guess a beach market works as well. Say a mountain on top of the hill it should, with the views and everything, should make the same or should make more than a property that's at the bottom of the hill because it has no views, even though they might be a tenth of a mile apart. However, in these calculators, it's saying, hey, this property is the same size, the same, same layout. It's going to make X amount of dollars, but you're on top of a hill. You have these views. How do you value the experience and the amenity of having views versus no views? How do you value having beachfront versus being tier two or off the beach and not on the beach? So that's what we're figuring out. That's what we're calculating. We're turning that value into a data point so that you can say, not only here's the address of my property, but my property's on the beach or it's got mountain views or this. And that adds value to the revenue. So you can get an accurate estimate. Because a lot of times the data calculators are just too low. They're just not accurate at all, because they're taking into account that radius and properties that are off the beach or not on the mountain or not on the lake or wherever. And as investors, we want to know what are the properties making that are on the lake to look for those real opportunities.
Oh wow, that's awesome. I didn't even know they did a radius, so that's good to know.
Yeah.
But that's why Kenny's gonna come up with a great solution, you know?
So, yeah, it's always like I mean this is what I do. I apply it myself, and I'm like, man, this is a pain in the like I'm just like looking for the right, like I'm like, there's got to be a better way to do this, and so now I'm just on a mission to solve all those pain points. So, yeah,
You will, man. You will. And this will be
thank you.
included in the subscription that you sign up for STR Insights. This is a features you're
Yeah. So this will be
incorporating.
features. Yeah, we're just going to keep adding features and include it in the product. And so, yeah, I mean, one of the products, like I said, I mean, we've created different products of people working together. So the realtors right now, they're paying for that ad space essentially because they're the exclusive realtor of the market. And so it's a product for us, but they're getting exposure in hot leads. So we're sending people to contact them, and they're the only ones representing that market. So it's a win-win for everybody. So if anybody's listening who's a realtor and is like, hey, do you cover my market? Like, just hit me up and we'll let you know. There you go. So put a plug in there. But I mean, we're going to do that with lenders, cleaning companies, property management companies, maintenance companies for every market we can, because that's what we want as investors. If you're going to invest in a new market that you've either A, never been to, or B, never heard of, you need to know who's the go-to, who's the team there that's going to make me feel confident to get into that market. And that's the goal, is to create that platform where everybody's there. And the user is, you're not paying extra for that access. It's all part of the subscription plan. And then everybody else there is getting your lead. So I mean, it's just kind of a win-win.
Oh my gosh, that's game changing. You guys are on the way,
Yeah,
man. You guys are on the way.
that's the goal. So, yeah.
Oh, that's awesome. Wow. And it makes sense too, like what you mentioned with the realtors. That means if they're in that hot market, they can
Yep.
go to the platform, contact them. Hey, I'm interested in this property that I saw on Zillow or Realtor or whatever. Can you find out more? That whole closing
Yeah.
aspect, right? They'll take care of it. So it'll be like a win-win.
And it's people we vetted, because that was the number one thing. I was like,
Oh,
I can't give you just random realtors because, well, if they don't own SDRs, they don't get it. If they managing isn't enough. They have to own, and they have to own in the market, because if they don't own in the market, like they don't know, like they don't truly know what it takes and how to calculate true revenue of a property. And so these people who own, they're going to tell you, look, You know, if you find a property and send it to them, that's not going to be a good deal. Or, hey, you need to think about this property because of the future growth and potential in this area, or they're going to add a, you know, like a ski lift, or, you know, a beach access, or an airport's going to go nearby or something like that, you know. And that's the real benefit of it. And we've really tried to be careful to make sure we're only allowing people on the platform who have a true experience in STRs. So
Well, a big difference, to be honest. You can get any realtor, but you guys take that extra step to do the vetting,
right,
and
yeah,
that makes total
that's cool.
sense. Wow, that is crazy. Oh, for STR Insights, I did have another question. I can't think of it. It's probably not going to come to me, and I hate when that happens.
Okay.
But what's the best way for someone to reach out to you guys to get a demo, or to learn more about the products and services you guys offer?
Yeah. So if you go to STR Insights, so INSIGHTS.com, you'll see we have a frequently asked questions page. I have demo videos on there. So if you're not sick of my voice already, you can go watch those videos and hear me talk about the tool and how to go through it. Got some short ones, I got some long ones. And then there's other information. You know, people ask us, well, where do you get your valuation data from? Or where do you get your revenue data from? Or how's this calculated? Or how's that calculated? And that's all in those frequently asked questions, because they're frequent and I get asked them a lot. So I push them in there. And then there's, you know, on the landing page too, you can see we also put out blog posts about different markets we'll find that are, you know, kind of emerging. We'll also put out markets that we're like, hey, no, don't, you know, you probably should stay away from these markets. Just other education too, so you're making the smartest decisions possible and learning what the right strategies are. Because I'm always like, my goal is to be on the forefront of finding markets and properties. So that's what I do, is find markets and properties, and like good deals when I say find properties.
Mhm.
And you know, that's my specialty. I do that on the side as well. I don't just do that for STR Insights, I do that on the side. But what are the new strategies? What are the new ways? I'm always looking, I'm always trying to find new data sources. And so we try to put that out in STR Insights to provide additional value to give people the edge. So when they are ready to look, like seriously look and subscribe, they're already ready to hit the ground running. So
Cool. And it's a subscription, right? It's month to month, basically.
yep.
You can cancel, you can, pay again when you need to look at a new
Yeah.
market, all that good stuff. So I
Yeah.
had
So
two.
we've
Oh no, go ahead.
yeah, sorry. I'll just say this about the subscription. We priced it so there's like three plans. There's a monthly,
Oh, okay.
quarterly, and yearly. We've discounted the quarterly and the yearly so that users can, because what I found is most people spend about 2 to 3 months on the tool. Because you find a market, you got to find a property, and sometimes that takes time, especially the right deal. And it takes about 2 to 3 months, especially for the first time buyer or even second or third. And so that's why we created that quarterly plan. It's significantly discount enough that it's cheaper than just getting. If you stay on for 2 months, you've already paid more than what the quarterly plan is going to do. So yeah, so I always recommend, like, just do the quarterly plan. You know, and if you're a power user though, you're looking for your, you know, fifth, sixth, seventh property, you're gonna be buying multiple properties a year, then the yearly plan is definitely the way to go, because yeah, we've discounted it heavily simply for that. But yeah, I mean, that's kind of the way I would approach it. If you're like timid about it, and just go for the month to month and see how it goes. But I say jump in and do the quarterly. So, but I am biased. I am biased. So you guys do whatever you
No, man, I
want.
totally agree. I didn't even know it was you guys offer quarterly or
Yeah.
annually. I knew quarterly. I didn't see it, but that makes perfect sense, man. If you're an investor, I would love to be an investor. I'm not even down that route like you are and all these other great people. I would love to be down that route one day. But that's a no-brainer. Like, just get the quarterly and go through that whole process when you find a property. Definitely.
I'll do you one. I'll do you one better. I will give you guys and anyone listening a promo code right now. So you'll get 10% off. I'm gonna put it in the chat too, Terry, so you have it. So it's
Awesome.
best markets 22, all caps. You put it in at checkout, and you'll get 10% off. And I think it's 10% off. I think it's any plan, if I'm not mistaken. So that you guys can get additional savings.
Oh, that's even better.
There you go.
Everyone loves those promos. Everyone loves those
Yeah,
promos.
there you
No, I
go.
definitely encourage anyone that's a real estate investor, like just try Kenny's product out. It literally helped us out to figure out what markets we're looking into, and it helps to get more insights on what's going on. I did have two questions,
Yeah,
weird
let's
ones,
go.
by the way, weird ones. You probably look at me weird, but like
Okay.
you're doing STR insights here in the U.S. Have you guys ever thought about, damn, once we master this country, right, the USA, let's expand to the UK. Let's expand to different countries outside of the US. Is that something in
Yeah.
the works down the road? You think towards the future?
Yes. Yes, it is. So it's going to be based on two things. One, demand. Obviously, like, do people in the UK or Canada, Mexico, Australia, the Europe, do they really want, do they want us to go to those areas? We've heard a few folks, but not enough to where I'm like, oh yeah, let's pursue it right away. The second thing is we need to be getting historical data, but more importantly, the housing valuations. And so the thing that makes STR Insights unique, out of all the features and things I just talked about, besides the regulation, that one's probably my like, I love that one. But and it's new, it's very new. Like we literally just like pushed it out last week on Friday, so like last weekend. So but besides that is the valuation information. It is of short-term rentals. It's not of residential homes. That's really, really important. Nobody is doing that. No one is thinking like that. We found a way to do it. And now we got to replicate that and see if we can replicate that method of how we do it in other countries as well. So, and that's tapping into MLS data and other systems. And I know the UK, Australia, Canada, they have very similar systems. So I believe we can do it. I just haven't invested a lot of time into looking into it yet, but it's really going to depend on one, demand, and then two, what kind of data can we get our hands on?
Gotcha. Yeah, that would be cool. One day go global. You guys will be like the
Global,
go-to
yeah,
platinum platform in the universe.
right.
Yeah, that's really cool. You mentioned about historical data. You guys keep up to 12 months of data, basically, and then as the year goes on, it'll be more collective to where it's going to start refining and give you like clear
Yeah.
indications as well.
So it's about seasonal trends. So a lot of people, well, my one problem with a lot of vacation rental data platforms is they give you monthly data. And that's good, but when as an investor, I don't know if anyone listening has purchased long-term rentals or just real estate in general. We never talk about, oh well, the rents, yeah, I'm making 1,300 a month, like that's a good deal. Like it's always based on what you made for the year. Like if you're trying to calculate a cap rate, it's based on 12 months of data, not month to month data. Month to month data is great to see seasonality and occupancy as that drops and falls to kind of know what to expect. But in a lot of markets, it's very straightforward in terms of like seasonalities. For example, a beach market in the wintertime, it's going to go down. In the summertime, it's going to go up. So we want to address that. So people, because people like to visually see that. However, we found that to get going and get this product out, it's all about the last 12 months of data because that's going to be your best uh, idea of what you can make for a property.
Oh wow, okay. I didn't even know that. See, I'm not even an investor, and you broke it down. That makes sense.
Yeah.
That makes total
So
sense.
that's the logic behind it. Um, I want to do that. I mean, there's a lot of things we can do. We have a lot of data in the background. It's just a matter of figuring out how to display it that's helpful towards for the user.
Gotcha. No, it makes sense. And you as an investor, that's my second question. I'm sure it's on the side gig of yours, like on your, you know,
Yeah.
growth. But do you have anything on the pipeline that you're saying, hey, I'm gonna get my seventh property, my eighth? Like, is this something you're looking into already, or you just kind of sitting back and just you'll
Um,
get to it when you get to it?
so I that's a good question. So right now I'm up to what I have 9 listing. It's too much, too many, to be honest. I either have to need, I need, I need to hire people or I need to drop some. Because I'm still managing and I rental arbitrage the ones I'm doing, and they make really good money. But as I, trade my time for money in this business, I've got to change my approach. So I'm personally not looking, but I'm helping people who are paying me to look for them. I'm also working with some funds as well as they look to purchase some bigger assets for short-term rentals. So that's kind of my like I guess my side hustle. I don't work at Citibank anymore, if anyone's thinking. I know I talked about that earlier, but that was gone a while ago. So yeah, so no more Citibank, but it's all STR Insights, and then my rentals as well. So that are have been going for a while. So, but in the future, yes, I think I will. I think I'll get a little more creative with it though. I might look into, I've started looking into events, properties that you can host events like weddings and other venues, but also can do STRs as well. I think there's a lot of value in that. Um, yeah, I'll just
Really?
keep it at that. So,
Oh wow, okay, really?
yeah.
I didn't know that.
Yeah, I mean, man, I was talking to an event owner in or not, I say event owner, a venue in Texas, and they had a property and they put up a bunch of like small cabins on, and then they had this huge venue, indoor venue they built as well. And so when they didn't have people, during the summertime or in the wintertime when they didn't have people going there for weddings, they just rent out the cabin separately. It was beautiful views, in the hill country, and they made 400K last last year gross revenue. I'm like, because weddings, like one weekend, they book all the little cabins, they book the whole venue and everything, and they're paying like 50, 60 grand a pop, for either, like this whole place. And I'm like, holy cow, like you guys are, so I need to look into the expenses and, there's so much involved with that, but it's a different avenue. And I'm like, I'm trying to level up my game and get beyond just thinking turnkey property. Let me just, make some quick money on Airbnb, but like, what more can I do to this property to leverage it? So,
Dang, okay. Wow, that's actually a good idea. That's a good idea.
hey, take it and run with it. I don't care. So, yeah.
What do you think about multifamily homes? Like getting into that market with like eight,
To
10 to
STR or
a little bit
to
of both. Like
long-term rent?
well, both. For your instance, like if you're an investor, right? Hey, I want to get a
Yeah.
multifamily home, 8, 12 doors down minimum. Like, do you think
Yeah.
it's worth pursuing that and seeing in STR insights and saying, hey, would that help kind of break it down further or give better insights on it?
Yeah. So I would I think actually there's a if you're let's approach it from two angles. One as just like a if you want to turn them into short-term rentals, I think it's a tremendous strategy, especially right now. I've seen a lot of people, some investors I'm working with, they're turning motels into boutique hotels for STRs. And I mean, these motels are just, it's like this 15 unit place selling for, $1 million, but they're going to turn into they're going to put 500,000 into it and turn it, and then it's going to appraise for 3.5 million. So they have the equity plus they're making all this revenue from 15 units. I mean, yeah, it's just like that's a lot of people are smart investors are headed that way. And I mean, man, we opened up a labyrinth here with what I'm going to say, but I believe this is, let me turn the switch. This is Kenny's opinion mode, but I'm seeing this trend with a lot of the big time influencers and people in the investors in the space going towards multi units, like you said, for short term rentals, so like boutique hotels. So we're going to see a lot more people come out saying like, oh, you can buy a boutique hotel and this is how you do it because they're doing that right now. And I expect to see that in about a year, more of those like courses and things. And then also turning just like duplexes and things where you can into short-term rental properties. In fact, one of the properties I bought in Buffalo, New York, downtown, is so it's a duplex, and I rent the upper unit and the lower unit, and then I rent them as a house together. So it's 3 listings. Property was 250K. I last year I grossed 130 off of it. by doing that strategy.
What?
So renting both units separately and then the whole house together. So because people who want the whole house, they book way in advance. And then the other people, who want the individual listings, when I don't have the dates to fill it up, I'll fill it up with the individual listings. So yeah, I tried it out. I did do some advertising, some marketing as well. And I do a lot with that, but I pushed that. So I was really able to like maximize my revenue there, but 130K gross. So, and just to give you guys an idea of profit, because you're like, well, what did you make net? Because you have expenses. I made 75 to 80K net.
That's amazing, man.
So yeah,
Damn.
no, it was so it was awesome. But that was with a multi-unit property. So in turning it into an STR. I still purchase long-term units as well. I'm picking up another one in January. I gotta diversify. Once again, that's my personal opinion, but recommendation is don't get so caught up in only doing STRs that you don't have other options as well. So
Very smart move, man. Very smart move. You just had me ask two more questions now because this is why
go
Kenny,
ahead.
this
Go
is why
ahead.
Kenny's the best, man. This is why Kenny's the
Yeah,
best.
go
I'm
ahead.
talking to him, man. You mentioned advertising or marketing. I would like to know exactly. I mean, you gotta spill all the beans, but how the heck did you market it, like you said, to get those type of numbers on the marketing side? I mean, other than OTAs,
Right.
we all can do that. But what are you doing to help propel those
Yeah,
sales?
that's a great question. So it starts out my strategy. I'm not the expert. I go pay experts a lot of money to know what they're doing. But what I've learned is understanding your target demographic is number one. Because if you do any marketing and you don't know your target audience, it's just a waste of money. So understanding the guests that are coming to your place, who are you trying to attract? So what I found, which is interesting, is the more specific you can get, actually, the better. So I found that people were coming to downtown Buffalo in the summer and the fall for weddings. I had a couple the year before, I had a bunch of people come in and they say, yeah, like we're staying, and they're booking way in advance. And what my pricing strategy is, price way up in advance. So if anybody wants to book in advance, they're paying like obscene numbers. And then as the dates get closer, I'll lower the rates a little bit, and then finally somebody will pick it up. But that works. I really maximize revenue that way. And like these wedding folks are paying stupid numbers for my place, and I'm like, maybe I'll market to them because there's some actual downtown venues that people will go to and we're walking distance to them. So I created Facebook ads and I targeted women who were engaged, certain amount of years because of these venues are like booked way in advance, and a specific target audience that was similar to the people who were coming to my place. And then so I targeted them, and then boom, this was 2021. Boom, all these wedding, hey, we're coming in, blah blah blah. And um because I charge higher, everyone's like, well, you're hosting a wedding party, and it's like, it's like the girl, like the bridesmaids, or the family of the bride, which is a lot better than just the bridesmaids. But they were paying top dollar. They took care of my place. I rarely had any issues. The worst thing I ever had happen was some glitter, and that's a little bit of a pain, but you get over it, like some glitter and you're like, whatever. But that was it. I mean, really great guests. They paid top dollar, and they loved it. They loved it. Our house, we even set up and made it so that, put standing mirrors in all of the rooms because that's what they want, extra hair dryer, blowers and steamers and irons, anything they wanted, we stashed in every single room, and they loved it. And so every year now, wedding parties, Facebook ads, Instagram, and then I started collecting their email addresses as well through Stayfi, and then I just do lookalike audiences in Facebook, and so that's a whole different subject, and you don't even have to address that. But yeah, like I said, I get a little crazy with it, but I just take it, kind of build each year upon each year, and grow that strategy. And so I am on track to do about. I think I'm going to do. I don't know. We'll see how 2022 ends out, but I'm 8% higher than I was in 2021 in terms of like revenue. So I'm probably going to do, what's that, like 140, 145 this year. So I'm excited
I'm
about
ex-
that.
I'm excited
So
for you. Wow, man.
yeah.
And you're running these ads. It's not like you're paying someone. You're doing the work.
Yeah, you set them, and I did a couple, like build out a couple, see which one works best, and then kind of go from there. So
That just shows you
yeah,
you got to get dirty. You want some revenue. You got to play with the ads, do lookalike audiences,
I'll
like test out things and see what
I'll give
happens.
you one interesting data point. If you want to nerd out with me for a second, I've
Of
noticed a
course.
trend. So there's a lot of hosts complaining on social media, I'm not doing as well as I was in 2021. And
Mm,
it's true. The
mm,
majority are not. However, properties that were in the 90th percentile are doing better than they were. A 90th percentile of revenue performance or more are doing better than they were in 2021. So the difference in January of 2022, the average difference in revenue of the top performing properties and the average was about 45%. The difference now, as of August, today, the difference is 55%. So that means there's a growing divide between people who are performing at average and people who are performing better. And so the average is getting worse, performing worse, and the better is performing better. So I don't know if that made any sense at all. But
yeah.
um, yeah, so what the takeaway from that is that the people who are doing best are usually the ones who have the nicer properties, better look, what they're marketing or they're doing additional things to make that revenue and really push it. And then the people who are doing average that are doing worse, it's because they're not putting in that effort or they might not have the ideal property. So different takeaways from that, but that is changing and that growing divide is very interesting.
Oh wow. Yeah, so basically you should start to advertise and figure out your target avatar and
You got to put in the work.
and put in the
That's
work.
the gist of it. So,
Yeah, you're way ahead of
so
it. You're way ahead of it. One more thing you mentioned too is that you help people find deals. Is that still something on the table, or is that just like you've
So I
mentioned?
have a separate business. I actually partnered with Bill Faith on.
Mhm.
It's called BK Hot Picks. So the letters BK like Burger King, but it's Bill and Kenny. So bkhotpicks.com. That's I would never hear it. I'm like Burger King Hot Picks, but bkhotpicks.com. And so what we do is because Bill gets all the time, and I get it too. Hey, can you help me find a property? I'll pay you money to find a property. Um, I mean, we're just so busy. So I have a personal team that I work with and we vet all the properties and we just put them up. And so the way it works is you can buy a region or you can buy the entire country that you're interested in. And we put up properties that are good deals that we think are good deals. And we even do, we're going to start doing, I should say, a weekly uh Zoom session with all the people in it. It's capped. So I think it's like 75 people only. So there's no like overbidding or anything like that. And we put out weekly and we usually put out a list of, anywhere from 5 to 10 properties that we find that we feel are really good deals. So there's plenty for everyone. And we've had a lot of people find properties they liked, and they got them. And so that's kind of the cycle of it. And that allows us a little more to free up some time for us, but also be able to help people still and find those properties. So that's bkhotpicks.com.
Cool. Everyone hearing, check that out because that's a no-brainer. If you just don't want to do the work, you can have Kenny
Yeah,
and Bill help you, and
we already did the
they
work for
already
you.
did the
Yeah.
work. Like it's a win-win. You got money, an investor. Just check them out. Wow, I
And there's
didn't.
more coming on. There's more, yeah, I'm seeing more and more deals pop up because people don't, they purchased some properties, they thought they'd perform and they didn't, and they're out kind of thing. And so, if you're, like I said, it's a business, so you got to treat it as such. But if you're willing to put in the effort, you can find some opportunities. So.
Based off people that buy properties and they didn't perform well, do you think those
Mhm.
properties can still perform well versus under
Yeah.
someone else's priority because they're not doing certain things right versus what you can do basically?
Yeah, so yes, the ones that we show, obviously, but usually it's kind of tricky. I mean, you have to kind of look for usually the decorations and what they look like, the furnishings or the property itself might need a few things like for example, you're in the mountains and you don't have a hot tub. I mean, that's become standard. So add a hot tub and that can increase your average nightly rate. your overall revenue. Just adding simple amenities or doing things to the property might actually add value. And so that's really what we're trying to target is what more can you add to it to really maximize that revenue? Because there's definitely potential.
Gosh, okay, cool. Dang, Kenny's just dropping bombs, man, just left and
I
right.
have bombs to drop. So I
Oh
was
man.
just at a I love it. I love the reaction from the bombs being I don't know why this is random, but I was recently at a conference and I was talking to rental arbitrage people how to use STR insights for rental arbitrage. And they were all like glazed over and I was like I had something like worked up for them and it was like just a knowledge bomb and I dropped it and you could just hear the room go and then they all got into it and I was just like that's what it's all about. Like here it is and everyone gets excited and like yeah. So
Ooh, yeah, no,
anyway,
definitely, man. Every time, man. Like I love what you do. Love
thank
your
you.
product, man, and I appreciate your time, man. I appreciate your time.
Yeah, it was fun. It was that much fun.
But
Cool.
yeah, I think that's all the questions I had because I probably asked way too many. But I appreciate you
All good.
just giving out the deets and sharing
Yeah.
knowledge. And anyone out there, again, this is Kenny, and check out his company, STR Insights. We do have a promo. I'll have it in the link description below. Any questions, reach out to them as well. I'm here to help. I do recommend get that quarterly plan and find your market because that's the best way to do it. Definitely.
Thanks.
All right, guys. So thank you and stay tuned to the next episode.